The value of the opening stock, 2 cars with the consignee. What is the cost of each car? 2 lakh. 2 lakh into 2 is 4 lakh. Currently, the amount of loss not recovered is 1,15,000 transferred to profit and loss account, which cannot be recovered from the insurance company. The consignor get a profit of 35,460. This profit goes to consignor. Commission, these 2 commission goes to consignee. Hello, my dear student. I am Dr. B.S. Subramania. Call my name Dr. B.S.S. Professor in Commerce and Management, Vidhyaashram, First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to hand Advanced Financial Accounting, Second Semester, Unit 4, Session 4, in favor of Accounting for Consignment Transaction. In the last session, I already told what is consignment. In a consignment, there are 2 parties. One is the consignor, another is the consignee. Who are the 2 parties are? One is the consignor, another is the consignee. The agreement that takes place between the consignor and consignee we called as consignment. Consignee will sell the goods on behalf of the consignor at the risk of the consignor. By chance, if the consignor pays an extra commission called delivery commission, when the goods are sold on the credit basis, if there is any bad debts of losses, that loss should bear by consignee, not by consignor. In other way, always the expenditure loss should be bear by consignor. When delivery commission means it is an extra commission payable by the consignor to consignee. When this commission is paid, if there is any loss of bad debt due to credit sale, should be bear by consignee, not by consignor. We'll move to problem now. Aradhya Agency, Mumbai, consign cars to history agent Mohit Traders. So Aradhya Agency is the consignor. Mohit Traders is the consignee. The agreement that takes place, Aradhya is in Mumbai, whereas consignee is in Shumaga. So, owner is in Mumbai, agent is in Shumaga. He will send the goods from Mumbai to Shumaga. 2 cars already with the consignee. Before sending, the last year there was a closing stock of 2 cars which lies with the consignee. The car had been invoiced at a cost price of rupees 2 lakh each. During the quarter year ending 31st March, Aradhya Agency sent a further consignment of 10 cars and paid freight charges rupees 30,000 and insurance premium 20,000. 1 car was damaged during transit and become unsaleable. The insurance company settled the claim for rupees 90,000. To this car, Mohit Traders cleared the car's arrival at Shumaga and paid for unloading, non-recurring, and octroi, non-recurring expenses. They drew a bill for rupees 2,50,000. This is an advance given by consignee to consignor in the form of a bill for 3 months, which was discounted by Aradhya Agency at 12% per annum. Now, we'll move with the problem now. Mohit Traders sold 8 cars at an average price of rupees 2,30,000 each, of which 2 cars were sold on credit. So each car contains how much? 2,30,000 to means 4,60,000 is the credit, and other 2,30,000 into 8, that is other is there, no? So they sold 8 cars, an average price of 2,30,000 each, of which 2 cars were sold on credit. The expense incurred during the period were, this is an expenditure made by consignee, indirect expenditure. He is entitled to commission 5% on all sale and 2% delivery commission on credit sale. Mohit Traders settled their accounts with consignor by sending the demand draft. So we'll go with one by one. The value of the opening stock, 2 cars with the consignee. What is the cost of the each car? 2 lakh. 2 lakh into 2 is 4 lakh. Non-recurring expenses incurred by the consignor and consignee for opening stock is not given. Therefore, the cost price is considered. Only the cost price is considered because there is no non-recurring expense of the either by consignor or consignee. Value of one car damage. The cost of the car is 2 lakh. Add proportion non-recurring expense of the consignor. So expenditure of the consignor, here we see 30,000 and insurance premium 20,000, totally 50,000. For how many cars? 10 car it is 50,000. For one car it is 5,000. Add proportion non-recurring expense, consignee does not come, it was damaged. So it is not yet reached to the consignee, only consignor expenditure will be taken into consideration because the car is not yet reached to the consignee, only consignor expenditure will be considered. What's the value? 2,05,000. This is a total accidental loss. 2,05,000. Then treatment of abnormal. Firstly, the value of abnormal loss, 2,05,000 debited to accidental loss account and credited to consignment account. Secondly, the claim received from insurance company 90,000 is debited to bank account. Thirdly, the amount of loss not recovered is 1,15,000 transferred to profit and loss account, which cannot be recovered from the insurance company. The company suffered a loss of this loss goes in favor of the consignor, 1,15,000. 90,000 only recovered from insurance company. The difference amount will be debited to profit and loss account. Now, value of closing stock. Cost of 3 cars. Here, totally 3 cars is there. Totally how many cars are there? 10 cars. Old is 2. 8 car is new. Totally see that. How many cars sent? Consignee. Cars, Mohit Traders, 1st January. Balance already 2 cars is there. During the quarter year ending, 31st Aradhya sent a further consignment of 10 cars. How many old cars are there? 2 plus 10, 12. Out of the 12, 1 car is met with accident, 11. Then out of that, they sold how many cars? 8 cars. How many left over? 3 cars with the consignee. So cost of 3 car, 3 into 2 lakh is 6 lakh. Add proportionate expense of the consignor, 50,000 for 10 car, for 3 lakh it is 15,000. Proportionate expense of the consignee, it is 20,000. For how many cars? Out of 10, 1 is damaged. So whatever the expenditure goes in favor of only 9 car. 9 car, how much expenditure? 20. You want for 3, it is 6,666. 6,21,660. This is the value of closing stock. $6,21,666 is the value of closing stock. Then, whatever the amount received as an advance, 2,50,000, 12% duration is 3 months, is treated as a general business expenditure, therefore not treated in consignment account. So, any discount on BR will be not treated in consignment account. It is considered as a general expenditure account. This will go to profit and loss account. In the books of Guru Cycle Mart consignment account, you already have existing how many car? 2 car. Each car cost 2 lakh rupees, 4 lakh. Consignment stock account. Goods sent on consignment. How many cars we send? 10 car. Each car cost 2 lakh. 10 into 2 lakh is 20 lakh. So this is the goods sent by consignor to consignee. The expenditure of the consignor. Got non-recurring expenses, freight is 30, insurance in totally 50,000 is non-recurring expenses, unloading and octroi. Then Mohit Traders, unloading octroi, non-recurring is 20,000. Recurring expenditure, salary, rent, showroom expense, office, totally 60,000 expenditure met by the consignee. Then there was an accident loss, we already calculated 2,05,000. Mohit Traders sold totally 10 car, 2 cars on credit basis, no? Already there, no? See that. They sold 8 cars and average price of 2,30,000. 2,30,000, 18 lakh 40,000. Consignment account closing stock 6,21,060. Out of the 8 car, 2 cars on cash credit basis and 6 cars on cash basis. Totally 18 lakh 40,000 is there. Then come back. Then Moe Traders commission on 18 lakh, total commission 5% on total sale, 18 lakh 14 to 5 by 100, 92,000 on 2 cars which has been sold on the credit basis, that is 2 lakh 13 to 2 lakh 30 is 4 lakh 60. How much percentage? 2 percentage. It works out 9,200. The total cost is 26 lakh 66,600. The consignor get a profit of 35,460. See, this profit goes to consignor. Commission, these two commission goes to consignee. This will goes to consignee. This will goes to consignor. Consignee account. When you make the sales amount lies with the consignee. He will deduct his expenditure. He will deduct his advance. He will deduct his commission. Then he will deduct his deal clear commission, consignment account commission, deal clear commission 9,200. Whatever the difference comes, 14 lakh 8,000 fine by, it will be sent by consignee to consignor in the form of a check or a draft. Who sends this? Consignee. He will give the account sale saying that when I sold the goods, no, I received how much money? 18 lakh 40,000. Out of 18 lakh 40,000, I deduct my expenditure of 20,000. I will deduct my advance 2,50,000. I will deduct a further expenditure of 60,000. I will deduct the commission of 92,000, and I will deduct the deal clear commission of 9,200. The balance left over is 14 lakh 8,000 that has been sent by in the form of a check or a draft. If you have got a doubt, so consignor can ask the question to consignee about all these expenditure. Then goods sent on consignment. What's the value of the goods sent on? By consignment 20 lakh. So it will be entered into trading account. Now, accidental loss. What's the value of one car damage? Total value is 2 lakh 5,000. Of that, how much amount recovered? 90,000 is recovered. How much you could not recover? 1,15,000, which has been transferred to profit and loss account, which cannot be recovered to, it will be transferred to profit and loss account. It lost to the consignor. Hope you understand. So, out of the 8 car, so 2 cars sold on credit basis, remaining balance 6 cars has been sold on the cash basis. Totally 2,30,000 into 8 we have done. So on the credit sale 2 cars, he will get the commission of 2%. On the total sale, he will get the commission of 5%. So hope you understand is not an invoice price, only cost price you are doing. In the next session, we are going to do the problem on invoice price. So far we solved for cost price, then we'll go to invoice. The method is same, only invoice price means cost plus profit will come. That I am going to explain in the next session, and we'll start with the problem on invoice price. So here, all the problem I have explained. So goods sent on consignment, what are the indirect expenditures are, non-recurring expenses are, what are the recurring expenses are. I already told in the second, third and fourth problem. I have explained which are the recurring expenses are, which are non-recurring expenses are. That is the most important. While valuing the closing stock, you have to take the non-recurring expense of the consignor, non-recurring expense of the consignee. While you are valuing the accidental loss, we take only non-recurring expense of the consignor because the goods is not reached to the consignee. So the expenditure of the consignee will not be considered. Hope you understand. We'll meet in the next session with invoice pay. Till then, goodbye. Meet in the next session.